Nigeria spent about 97% of her revenues on debt servicing in fiscal year 2020. Data and Fiscal Transparency Advocacy Group BudgIT has released a 2020 budget implementation report on Nigeria's 2020 budget. The report breaks down the revenue and expenditure targets for Africa's largest economy. And joining us to discuss further is co-founder and director of BudgIT, Mr. Oluseun Onigbinde. Seun, you're welcome. Thank you so much for joining us.
It's a pleasure being here.
Great to have you. I guess we can start at the top. The revenue target, 5.3 trillion. I think when we brought in 3.4.
Yeah.
How do you assess that performance?
It was expected because every time we have a budget presentation, there's several items like recovery of domestic fines, stamp duties, signature bonuses that are used to pad revenue figures, in my own view.
Yes.
And it's shown like in the last 3 or 4 years that those lines have not turned out any revenue. So I didn't expect that we're going to hit those numbers. And we also had a record deficit that we projected for 2020. Now we are 3.42. We know that 2020 was a grim year with the pandemic and the slowdown of trade, the collapse of businesses. So it was expected that we have a weak revenue profile already. It was definitely going to get weaker because of the current environment that we had. So it wasn't surprising to go that low.
What about if we break down revenue a little further? Oil, 1 trillion naira was budgeted. 1.4 was what we brought in for fiscal year 2020. You take that in as good news. I mean, that's, as far as that performance is concerned.
But oil is a space we don't determine every single thing.
Right.
So pricing, even production to some extent, OPEC still gives us quotas. So I think the pricing was higher than expected. So maybe we had spent 1.1 trillion, we had 1.4 trillion. But it's just we can see that in the 2012, 13, 14 window, when oil prices were high, we don't trace that for oil revenues. And even despite the exchange rate was was really much more stronger then.
Yeah.
We're around 300 and something now, then it was 162. And so that means if you're going to even adjust, we could have been doing like 6 times what we're doing right now. But what is just very, very clear to everybody right now is that oil revenues can't really do much, even to Nigeria's revenue matrix. There was a time that, if you take 1 over 3.42, that's less than 30% is what oil is bringing to the revenue matrix.
Right.
And go back in like another 10 years ago, 6 years, oil was doing around 75% of government revenues.
Wow.
So the dynamics is significantly changing, and that's a big experience. But despite that, our revenue size is still grossly small and very, very low. Yeah.
Thank you for that. Moving to non-oil revenue now, 1.62 trillion was the target, brought in, I think, about 1.26. In particular, I want to ask you about company income tax, right? And that underperformed. Pretty much all the metrics on that non-oil revenue underperformed. Just last week, we had the news of the FIRS going after MultiChoice for $4.4 billion or so. Not sure how they came up with that. But as far as company income tax is concerned, what's the 2020 story for Nigeria? Is it a collections issue? Is it how do you see the CIT space?
I think it's more of a performance issue. Because apart from fast-moving goods, maybe in banks, most other companies were in distress. And it was because you could say that consumption had a big hit during last year. Growth also was significantly impacted. So it was very, very clear that oil was going to be a big problem. But company income taxes will continue. We still don't collect enough, and it's just because the formalization of businesses in Nigeria is very, very weak.
Yeah.
So we still don't have a clear mechanism of reaching out to every single formal businesses that should pay taxes. That's one problem. Second problem is that it is not incentivized. So company income taxes is distributed on the basis of population. It's not distributed on the basis of where exactly an industry is sited. So if I bring all the businesses to the Lagos corridor, the company income taxes that entity pays is still distributed based on the federal allocation of population being the major element in that space. And so I think those are kind of things that would not make us significantly grow there. But if we find out that we have been growing on the company income tax frontier in recent years, I think, but we can do far more, much more better than what it is right now. but the dip that you see last year, I guess that's more has to do with the outlook, the outlook areas. So like the pandemic actually significantly affected companies.
Thank you for that. Another touch point, customs revenue that also underperformed. Real loads of headlines with respect to all that's happened with customs. On the customs side, is it the human element that's the main blockage of the customs doing better than what it's bringing in? As for 2020, I think what are the figures? 450 billion was the target, 394 was what was realized. So what's your take on that?
I think so. Customs has a significant dip. I mean, even compared to the previous years, they didn't do well. But it's understandable. I think I expected that their revenue lines would be most impacted. But if there was anything that was really challenged last year was trade. I mean, global trade tanked significantly. So it was expected. But also there are also issues of efficiency around customs. Scanning machines still not at standard as it should be. The time of Papa and the whole mess there. We've not been able to resolve that. We're still one of the most expensive places to import to export goods in the country. And until we fix those inefficiencies and being able to open up the space in a way, we can't really do a significant. We're still losing a lot of revenues to our neighboring countries or to the neighboring ports around Nigeria. And we also need, the whole Lagos environment is congested. It's also the time that there should be much more deliberate interest to open up Warri, to open up what is happening in Akwa Ibom with the deep sea port, maybe somewhere around Ondo, which is also close proximity to Lagos. That's what we should be doing. But right now, the way we are so fixated on our Papa, I think we're eating the ceiling, whatever we can do in that space. And it's just because Lagos has become so big, urban, and whatever we were planning with our Papa didn't fit into the profile of the population of Lagos right now. So I feel, there is need for much more efficiency, and also needs for expand infrastructure significantly. Yeah.
Thank you for that. VAT, value-added tax, so that's in the budget there. 284 billion, collected about 203. Still have one of the lowest rates in the world. So on VAT, I want to ask you, is now a bad time to be talking about increasing VAT, which is what, 7.5, or is it along what you said with company income tax? It's a collection issue. What's your view on the VAT?
I would do more to fix our efficiency issues first, a collection. And I think that's what maybe we're trying to do with NIN, and also trying to do proper business registration. Maybe also being able to match people's personal profile in terms of wealth, into how much they pay in terms of taxes. And maybe we're able to get much more insight into whatever we're losing the ball. But I feel this is not the time to increase VAT. Right. 7.5 is still relatively low. By the time you put out, but we're in a time where inflation is high already. Trade sector of the GDP is really significantly weakened. Currency devaluation, has been at pace. With the whole divergence you continuously see at the parallel market, and also what you have at the interbank rates. So in a way, this is not the time to bring another factor that has an inflationary element to it. I think this is where we have to really look at what we have. Have we mined enough data? Are we more efficient? Have we collected as much as possible? Within the space of what we have we brought more people to the register? To the tax register, before we now say, okay, we need to take the rates up. Even our CIT at 30% is one of the highest in the world. There are conversations of making it around 15-20%. Even in countries like the US are trying to even cut back, which is also to give more incentive for businesses to reinvest. But I feel this is something we also could consider. Maybe our VAT is low. Maybe also we are also not efficient in collection. Maybe the way it's centrally collected is wrong. Give the states the power. Give them the capacity to collect their VAT, and you can build a strong tribunal to rebuild disputes. I feel this is not the time to just make that adjustment. All
right, fair enough. We've touched on revenue. Now, expenditure. I want to get your thoughts on expenditure, and gosh, I think that one was 93% performance there. So there, 10.8 is what was budgeted. We did 10.1. And also the debts are. Portion of debt service in 97%. Please, so your thoughts on expenditure?
On expenditure, it just shows that we are not slowing down on expenditure in any way. because when there's no significant reform, you see. And it's just because we have not decided to do the hard things. For example, what takes most of our expenditure? Personnel cost, around 3 trillion there. You have now debt service cost, around 3.3 trillion. So by the time you put that together, it's already around 6.3 trillion. Then you have other costs like overheads, maybe around 280-something billion. So, I mean, the biggest chunk of what you can adjust right now, based on what I see, is you do two things. One is to rationalize your personnel costs. So people will say, oh, maybe this is not the time to sack workers. But this is the time the federal government needs to get efficient about its personnel. I know Kaduna State did it recently. It's got a lot of flack for it. But I think the federal government also needs to look. We just can't keep paying salaries and then just keep moving things forward just because we don't want to shake things. There has to be a time to shake things. And make sure you can even have the same personnel cost and redistribute it on less people so that they get more for an economy that is already even tanking already. That's one. Two is the fragmentation of capital projects. We don't spend a lot, maybe 1.6 trillion on capital projects. But we also spend on too many projects that really don't add value in a way. So I think it's also very government to be much more focused and say, we'll do few things and we do them right. And not just do too many things and just doing them in half measures. That has to change. And on debt servicing, it's an accumulation of the past, but we're accelerating fast also. Because two things, the devaluation has impact on debt servicing.
Yes.
Because when you're a foreign debt, you circulate it in dollars, definitely, but the conversion makes it much more higher. And the second thing also because we've been borrowing too fast recently, and that's going to have continuous impact. So maybe in the last 10 years, we were doing less than 2 trillion on debt servicing. Now, we've ballooned it to 3.3 trillion, and we can forecast in budget. In another 5 years, we can be getting up as high as 5 trillion naira in debt servicing.
Wow.
Yeah.
Wow.
Because
that is...
because we are in a place where we just accumulating debt and we're not structurally tying that into our capacity to generate future revenues. We are not structural about how we're piling up debt. It looks like we're basically using them maybe as a monetary policy, maybe just to show up our reserves. And I don't think that is a good opportunity or a good decision because it has significant impact on the downline. But what I'm saying right now is maybe the only way is a bit of slowdown on the foreign debt because it has a lot of exchange risk, which is already expanding the foreign debt expired. But maybe we also want to look much more inward, one, and two, be able to finance projects that are self-liquidating and invest in much more private sector partnerships. A lot of things that we are trying to pile on debt upon, we necessarily might not need to do that. We could do much more with building business cases for a lot of this investment. I mean, Lagos-Ibadan Express Road, for example. It's not something we should pile debt on. The road to the Benin Road, it's not something we should pile on. The Nnamdi Azikiwe, the road in Enugu leading to Port Harcourt. We should be able to think clearly and strategic about what do we need to do, PPP or so that we also can free up funds to do much more important. I think the way we continue on, because it's easy. The Chinese is there, the World Bank is there, the Eurobond is there, the IMF is there, and we're knocking every door. At the point, we say right now that oil is not enough to meet our needs. There comes a time that we will knock any door and nobody's ready to lend us money anymore. Because you might say, oh, our debt to GDP is really low, maybe around 25-26%. But our debt service to revenue is in an absurd and abnormal range of 97%. You can't find any country, that operates at that level. And that's going to come when credit decision, credit rating, and even disbursement of funds is going to happen.
Oluseun Onigbinde, co-founder, director at BudgIT. Thank you so much for taking us to the Budget Implementation Reports. Really appreciate it.